Hi everybody, this is Martin Mesa with Rate 1 Financial. Welcome back to Mortgage Mind. Here we are, tip and trick number 19. One more to go after this. This one is called delayed financing. Okay, so first of all, what is delayed financing? Delayed financing is a loan program. It's a cash out refinance loan program, to be specific, that Fannie Mae and Freddie Mac have put into place. And what it allows you to do is, let's say you buy a house and you pay all cash for that house, meaning you didn't have to get a loan with a bank to buy that house. You paid for it all cash. It allows you to, the minute you close escrow on that purchase, the day after you become the legal owner, it allows you to apply for a cash out refinance of the property you just bought, to pull back out up to usually 75% or so of the money you just used to buy that property. So if you buy a house, for example, $500,000 and you pay all cash for it, you can turn around the next day after escrow closes and apply for a cash out refinance to pull out usually about 75–80% of that. So you could get maybe up to $400,000 of that $500,000 you just used to buy the house all cash back in your pocket in the form of a cash out loan against the property you just bought. Why would you want to do that? Well, if you're buying a house and you're up against the competition, if you can tell the seller, hey, I'm buying this house and I don't need a loan from a bank, I've got the cash to pay for it in full, that makes you a much more attractive buyer to that seller, especially if some of the other people that also want to buy that house are dependent upon a loan from a bank to get the money they need to buy that property from the seller, because a loan can get denied, it could take longer to close. There's lots of reasons why an all cash buyer can be more attractive to a seller. So if you want to be more attractive to your seller, an all cash offer is a great way to do it, especially if you're competing against people that are going to rely on a loan. So, but having said that, some people don't want to put all the cash into that property, but if they have the money to do it, they pay for it all cash to get their offer accepted. And then this delayed financing loan allows them to pull out a good portion of that money right back out of the property in the form of a cash out loan. So all that money's not tied up in that new house you bought. So that's what a delayed financing will do for you. And as far as what's required for a delayed financing to work, it's a Fannie Mae, Freddie Mac loan. So you still have to, obviously you still have to qualify for the loan you're getting based on your income and your credit and all that. It doesn't change, just like a regular cash out loan. But you also have to be able to prove that when you bought the property, you didn't get any sort of loan to buy the property. In other words, it was a cash out loan, and the documentation from the escrow company will prove that. It also has to be what's called an arm's length transaction. And an arm's length transaction just means that you had no prior relationship to the seller that sold you that property prior to you guys going into escrow for you to buy that property. Also, if you, for example, borrowed money, let's say from another line of credit you might have against another property you own, or from the bank to obviously buy that house all cash, and it's on the paperwork that you borrowed money from somewhere to pay for the house all cash, the cash out refinance proceeds will require you to pay back or pay off whatever money you might have borrowed from somewhere else to buy the house all cash. And then after that's paid off, whatever's left over goes back to you. And like I said before, you have to prove where all the money came from that you used to buy the house all cash. Hence, that's when they find out if you borrowed it from somewhere else and require you to pay it back from the cash out loan. And lastly, if you did get a gift from a family member, for example, for some of the money you used to buy the house all cash, then the money you get from the cash out loan cannot be used to repay or to pay that person back, that person that gave you the gift money to buy the house, because in a sense that's not a gift if you have to pay it back. So they don't allow you to pay that person back. So those are some of the main things that are required for a delayed cash out refinance loan. So if that helps you and you are interested in finding out more about that program, and you can buy a house all cash but don't want to keep the money in the property forever, talk to your loan officer about that program. It might be helpful to you, or give us a call and we can tell you a little bit more about it and even find out if you can do something like this for yourself. So that's it. Tip and trick number 19 is done. One more to go and then we're finished. So hope you have a great day. Hope this was helpful. If you found it helpful, please like and share it with your friends and family. Take care.